In this video, we'll cover how to trade markets using price action rules. In order for me to understand which price action rules do I have to apply, I have to understand what is the current market structure, because every type of market structure requires me to use different price action rules. So right now the market structure is indicating a trend range because we have flat 1 bar EMA, consistent price swings up and down. I have to follow shortened trend lines because I'm navigating a trend range, and I have to identify important key levels, the extremes of a trend range. Why? Because I want to buy a low, sell high, and most breakouts will fail. So I have to understand where the extremes are. I want to visually see it so I understand where the market may pivot. Okay, so I'm going to identify the low of the day and I'm going to select the high of the day. I can make the resistance a little bit higher like this, but this was caused by the news and there's spike in volatility without any confirmation. So as of right now, I like keeping this resistance at this place because I have a lot of confirmations and overall it makes trading range quite healthy. So right now what I have to do is I have to follow short-term trend line rule. This downtrend is not getting a retest, so prices are a little bit more bullish. However, uptrend has a break, moved to a new extreme, and right now prices are failing to the downside. Why they are failing? Well, because most breakouts according to trend range rules will fail. So we have this uptrend having a break and new high, and even this tighter one has a break and a new extreme. We're breaking below EMA, and now we have new high for a central long failure. This right here is a lower high, confirming this fell breakout. And because we have to apply trend range rules, buy low, sell high, and most breakouts will fail, it take one thing higher, reverse all the way down. This is great high probability setup, lower high confirmation setup of this fell breakout. Once I saw prices trending lower like this, I connected the first two swings at the top, something like this. I'm going to copy, put it at the bottom because I always want to have channel present on a chart. At this point, I'm still thinking we may get second entry short to test the new extreme, new low first entry short, but hold on, we're breaking back above EMA. Second entry short didn't push below EMA, it's still above EMA, so of course I cannot sell. This uptrend may get a new high retest, so since we broke above EMA, I'm not thinking about selling because I need to see prices back below EMA and EMA acting as a resistance. And now that I can see that prices are completely retracing this entire downtrend, it means I have to adapt, and the downtrend was most likely slightly tighter, something like this. But you don't really know this when you're watching this live because you have to always start from the very top or very bottom of the move, connecting the first two swings. So this time, the downtrend started a little bit lower, small break, new extreme, no problem. I'm going to adapt. Now I'm going to redraw uptrend working higher. And you can see prices are swinging up and up and down. Buyers bought at the bottom of the trend range. Close outside. I expect new high to be tested. We tested the new extreme. There was almost new low first entry short, second entry short failure. But by the time the second entry short finish, you can see how big this bar was. Also, there was no trigger above this bar, and prices right now bounce off the resistance, and we keep working higher. So at this point, what I have to do is I like putting my resistance a little bit higher, something like this, because the trend range is clearly expanding. Okay, when you have a lot of failed breakouts, that's a good sign that you should expand your trend range, widen the key levels. Why? Well, because failed breakouts, they should be rare. Once you have a lot of prices breaking the key level, a lot of failed breakouts, that's a sign. Hold on, the key level has moved, and right now you can see the trend range still is very healthy. I have a lot of confirmations. Let's see what's going to happen. And now we have a new low first entry short, pullback, second entry short. Uptrend played out with the break and the new extreme. We're at the top of the trend range. This is one top, double top, triple top. So this right here is a triple top. Great bearish bar, new low first entry short, second entry short. You're far from the EMA, so you're most likely going to pull back. And because it is at the top of the trend range and most breakouts will fail and the resistance and the support will hold, you're selling high and uptrend played out. This is great. Triple top. You have a lower high here, but you cannot go short below this bullish bar. You have a double bar entry, but you're selling directly into EMA. I don't really like it. Then you have felt second entry long, but I cannot sell. We're still above EMA and it's a doji. Okay, why? We are still above EMA. I want to see second entry long bulls getting trapped below EMA. So I don't really like selling just yet. It still worked though, but I can't really cherry pick. It's still above EMA, horrible doji bar. Let's see what's going to happen. And we're breaking strong above EMA. This is not what is supposed to happen. Now we have lower high, but we broke strong above EMA, massive bullish bar. That's a good sign that we have to be patient. We have to skip. And market keeps working higher. And at this point, can I think about selling? I cannot, because I have to ask myself, hold on, prices made a break a new high and we didn't go all the way down here to test the support. Okay, that is not uncommon. We can have one more leg working higher, one leg like this, second leg like this. Okay, this can happen. But since this downtrend had an attempt to get a break in new extreme and it failed, this means that the prices are way more bullish. You can see empty room here, empty room here. We can't even test the midline. So at this point, so much empty room at the bottom, it's suddenly not acting as a trend range. The whole time here, we're swinging up and down through the EMA, and now we barely break below EMA, instant reversal. Break below EMA, instant reversal. So at this point, there is bullish imbalance, and I cannot be thinking about selling because we may have a brand new option established. That's what's going to happen. Okay, we have a new high, first entry long, pullback, second entry long. So we have a second entry long. I don't really like taking second entry long just yet. Why the second entry long is not a great setup just yet, even as a breakout pullback? Well, breakout pullback out of a healthy trend range really needs to get confirmed. Okay, but because EMA keeps holding and this kilo is holding as well, it right now allows us to draw a brand new wide uptrend, because I have to explain why after breaking new high of the initial channel we keep pushing higher and there's bullish imbalance. So for this reason, I'm looking for wider channel, and it also explains why we didn't get new low for this downtrend. This is a lot of times a great clue. We actually talked about this on Monday, I believe. The downtrend didn't get a full retest, only double bottom, and also it made a brand new wider channel in place. So this is right now the confirmation that there is some bullish momentum. No new low was tested, so wider channel has been established. New low first entry long, second entry long. We have a second entry long. Remember, breakout pullback is good while you're trading a trending market or the imbalance is strong. This was pretty much still a healthy trend range, so I really gotta be careful. But now I have a high-low confirmation setup, and now I can feel more confident that I'm reading the structure correctly, because sellers, they got trapped, selling into EMA, and prices instantly reverse all the way back up. So this high-low is confirming the second entry long and breakout pullback. And what do we mean by breakout pullback? This right here acted as a resistance the whole time. It broke higher. Most breakouts will fail. We came back, tested the resistance, and the resistance is now acting as a support. Okay, so the resistance transformed into support, breakout pullback, high-low confirmation setup of the second entry long of the wider channel, and it's confirmation of the breakout pullback. And this is great high probability setup, great high-low confirmation, second entry long, breakout pullback. You're gonna wait for the trigger, drop a limit order, and stop loss always has to go one tick below the signal bar, and the brand new push phase was established. And now we talked about price action rules. The whole time inside of trend range, we were looking to buy low, sell high, expecting market to pivot when the breakout will fail, and we're drawing for the most part tighter channels. Now I have to apply slightly different rules. Why? Well, because the structure is changing. Okay, price action is telling me everything. This is no longer trend range because every single low and high is higher and higher. We have push phase, correction phase, push phase, correction phase, push phase, correction phase, push phase. So we have evolved into a brand new uptrend working higher, and I have to right now adapt to uptrend rules. So I'm no longer thinking about selling. I can draw bigger, wider pattern because I'm right now trading a trending market. I have to reset the count at each new high because I'm using the counting technique. We have a new high for the entry long, so I'm thinking about second entry long. I would like to get second entry long, but EMA didn't hold and we broke below EMA. So this is not ideal. Why we broke below EMA? The signal bar also didn't even trigger below. I can't really mark it green. It is a very tempting setup context wise. I can mark it more aggressive. It is a second entry long, but EMA was supposed to act as a support, and the signal bar also didn't trigger below the previous bar. Not the greatest formation of the setup, but you're expecting second entry long, you're doing great. So we're expecting high-low confirmation setup. By the time we get a high-low, of course, we cannot take because we're so far from the EMA. We're too far up. So I'm going to be patient. New high was reached, so I have to reset the count. I have to right now redraw short-term downtrend working lower. Can I go long here? I cannot. Also, what I can do, because EMA keeps flattening, and you can see one top, triple push higher. Empty room here, so it looks like market is about to correct a little bit more. Because EMA keeps flattening, I can redraw. Small consolidation. That doesn't mean I'm thinking about selling. No. In fact, it gives me key entry point at the bottom because we traded up into this. Okay, so downtrend is in play. Small break, new extreme. So downtrend played out with the break and new extreme. The support is coming into play and a great signal bar. new high, first entry long, pullback, second entry long, one bottom, double bottom. This is not really a triple test because we can't even anchor it here to the left. So mainly one bounce, second bounce. So this right here is a second entry long combined with the double bottom, downtrend played out with the break new extreme, decent high probability setup. Why? Because we expect new high following the trendline rule. Okay, we expect this uptrend to get a new high tested, a high that is going to be higher than this latest high inside the channel prior to break. Okay, so we want to see new high tested, prices are pushing higher. So what's going through my mind, high-low confirmation setup or plus second entry short. Now we have high-low confirmation setup. I was ready to take it, but I wanted to see slightly better bar. Even doji would be okay, but once I saw bearish red body, I canceled my order. But context wise, it's a strong setup. We need to get new high. So if you took a risk here, no problem. Now we have new low, first entry short, second entry short failure. Okay, because the sellers selling the second entry short against the trend, they're gonna get trapped because we traded up into this. We need to get new high, but once again I skipped it because 1 2 3 4 5 6 7 8 bars stacked right next to each other. So only aggressive risky trade you can consider because it is just so stacked, so congested. It can pull back a little bit lower, but you know, downtrend played out, so there's a big chance we're going to test the new high. And now we have new high, first entry long, second entry long. Once again, you know, so stacked together, not easy to take it. But if you're a risky trader and you want to jump in because you truly need to get the new high, I can see the reasons why. Mini new high, first entry long, second entry long. Context wise, new high has been reached. So right now I'm gonna pause, looking to go long, but notice the massive push to new extreme and prices are quite strong. Hold on, this is significant push to new extreme, and in fact, if I'm gonna take a look at 10,000 tick chart, I can see that the uptrend, the slightly wider one, is still in play, and we're breaking above EMA again. So at this point I'm gonna zoom out. So what I'm gonna do, I'm gonna try to draw slightly wider channel. There's a possibility for me to draw spike in a channel, something like this. You can use the higher time frame, for example the 10,000 tick chart, and you can see the structure is not distorted at all. I still have a lot of confirmations and the uptrend still looks clean, healthy, consistent series of price swings up and down, slightly working higher. So this is right now a confirmation that I can draw a slightly wider channel. Let's see what's going to happen. Downtrend played out with the break, move to new extreme. So the downtrend played out. I'm going to mark my break and the new extreme. Market moves in pairs of twos, one leg down, second leg down. This is technically a third entry long because you have a new high here, first entry long, second entry long. It's not high low because it is below this second entry long, and it's not double trap because it closed below the EMA, but because it is off the key entry point, visual second entry long when the trend is quite strong, visual second entry long is decent as well. Great signal bar you can consider because you're buying low where the correction phase will end and a brand new push phase will start. Can we get a high low confirmation setup? Now we have high low confirmation setup. The signal bar a little bit neutral, unfortunately closed below EMA, headed form 2 ticks higher bullish bar above EMA. Great green high probability setup, a little bit more aggressive because the signal bar is a little bit weaker, but still you're buying low, downtrend played out, high low confirming the visual to like a pullback and the fact that you need to get new high. I can slightly widen it, it is still in play. New low, first entry short pullback, second entry short failure. Yes, this is a failed second entry short. Problem is, you like the failed second entry short that forms quickly after the count reset point. Now you made quite a significant push up, so it is a little bit more aggressive. Also, we're going a little bit sideways, but 2 key entry points, it should hold, but it is better to get a failed second entry short much quicker after you break above EMA. It still held, break, new extreme, perfect price action, and market can close. Today we started with a trend range structure, so you have to follow short-term trend line rule. You can see how the EMA is flat, consistent price swings up and down. Make sure you're trying to locate an important key level because this is where you expect market to pivot. Buyers buy at the bottom, sellers to sell at the top. Once you're struggling to go to the midline, let alone the bottom here and here, you can see how market is turning into somewhat of a bullish imbalance. Breakout, pullback. You really need a high low since the trend range was quite healthy since the beginning of the session, but the high low is the confirmation that you can finally think about buying. We evolved into a nice uptrend. And it's pretty much right now just drawing the short-term channels, looking for the visual aspect of two-legged pullback, and trying to buy low at the key entry point, the trend line or the EMA, because the lower you buy, it is counterintuitive. This is why trading is a little bit difficult, especially when you're a novice trader, because it is counterintuitive. You see market correcting, you want to see market proven to go higher and higher. So a lot of times what beginners do, they see market go higher and higher and they buy at the very top. Finally, the market is proven, but you need to learn to not use common sense, trust price action rules, because you have to do the complete opposite. You need to see market correcting lower and then forcing yourself to buy at the key entry point, either the trend line, this is why we're looking for market geometry, or the EMA. And once you push above the EMA, that's the easy confirmation that the market's gonna go higher. So pretty straightforward price action. We're quite lucky to get this movement since yesterday was trading holiday. I hope you had a good trading day. I'm gonna wrap it up and I'm gonna talk to you next time. Good luck with your trading.